Well, good morning. Welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN AM for Friday, May 7th, 2021. And our top story today, a divestment gap emerges. Well, joining me now to discuss this and a lot more is Rick Seltzer. He's an editor with Inside Higher Ed. Rick, so great to see you. Welcome back to the program. Great to see you this morning.
Thank you so much. Great to see you too.
So let's talk divestment. And, this is a huge topic in some circles in the, in a lot of circles in higher education. But there seems to be a divergence, if you will, between some areas of the country and divestment. What can you tell us? Because you and the team did a lot of work on this.
Yeah, one of our reporters, Emma Whitford, did a really good job analyzing the state of divestment from oil, gas, coal, other fossil fuel type related companies across the country. Because we have this moment where the divestment movement and ethical investing advocates have notched a lot of wins or things that they can hold up as wins. There's a long list of wealthy colleges and universities that announced plans to do some sort of divestment in recent years. Brown, Columbia, Georgetown, Middlebury, University of Southern California, Rutgers, I could go on.
Yeah.
I think we didn't map them directly, but I think generally speaking, if you look at it, it's East Coast, West Coast, a lot of Northeastern institutions, and it tends to be less focused right now. Divestment successes seem to be less focused in areas where state economies are very reliant on oil and natural gas, which probably isn't the most surprising thing when you hear it, but I think it's an important thing to highlight, given the fact that there are some universities in this country, particularly public universities, that draw a lot of money from drilling oil.
So this divergence, it's more out of expediency and practicality than it is, you have got to juggle this, right? Because if you're relying on, let's just say Texas or Alaska, these are, as far as I know, very big oil. I can't think of all the top ones in the country, but they're among the top oil producing states. Their economies are dependent a lot in terms of oil revenue, offsetting a lot of the lack of taxes. But when it comes to a public institution or a private institution, they're going to get the residual benefits of that as well. So it really becomes more out of practicality than anything.
Definitely. And these are institutions that not only is the state economy tied to it, and that matters for their investments, but they're training students to work in whatever the local industries are. And so you have this situation of, well, this is a part of the economy that's going to function for a while. Someone's going to make money off of it. If it's our state making money off of it and we want to be connected to industry, we need to train students for it. In Alaska's case, they have some board members who are either current employees or former executives at mining or oil companies. And so I think it's a question of almost local support, local control, local involvement. And so that's before you get into the state policy issues. I mean, Texas, for example, actually doesn't allow its university permanent fund to make investment decisions based on social decisions. So there's another level of restriction on it too.
Well, let's just take a step back, because as we've talked about, there's a lot of momentum around renewable energy, ESG, sustainability, ethical investing, all the things that, are kind of wrapped up here. And this just, and it's not just, by the way, endowments, but this just kind of flows down to endowments. And I think with this new administration, there's a little bit, I think people perceive it to be a little bit more amenable to these types of policies.
Yeah, that's right. There are a bunch of different things to factor in here. And I think you hear a lot of different questions whenever the idea of fossil fuel divestment comes up. There's the question of, does it matter when a university makes that decision? And then there's the question of, is it a smart financial decision? And what time horizon are you looking at? And these are not easy questions to answer for the most experienced and people with the most expertise. And there's an element of the divestment movement that is fighting it out in the court of public opinion. So the way that those detailed analyses about time horizons and fiduciary duty get boiled out in the public is kind of an interesting thing to watch.
Yeah, and you see the students, just kind of reading the article that your colleague wrote and did a lot of research on, there's different ways to handle these students. A lot of times the students will bring this issue and say, well, we don't think the endowment of XYZ should be investing in guns or fossil fuels. I mean, it's not just fossil fuels, but that obviously is a huge component of this. But these universities handle it in different ways. I was reading, I think somewhere, that they chose to arrest students rather than open a dialogue. And well, that just creates a lot of animus, I would think.
Yeah, and the students, we had a football game get stormed a few years ago. I think it was Harvard, Yale. They came out onto the field during it to push divestment. Sometimes they occupy buildings, and sometimes it's more of a dialogue. It is a wide and varied range of, I guess we could call them interactions.
Yeah. Well, Rick, I want to take a very quick break. When we come back, we'll talk more about this divergent gap that exists in divestment. You're gonna want to stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Are you stuck with a low credit score? A credit report and score that's causing you to be denied credit or pay higher interest rates than others for the same things? Then do what Terrence did and call Credit Repaired for your free credit evaluation to help restore your credit.
I started thinking about buying a new house, and my score wasn't where I needed it to be. I called and spoke with one of the representatives, and we just had a good conversation, and I liked what he was saying.
Just one call for his free credit evaluation was all it took to start back on the track to repairing his credit.
I'm seeing the deletions and I'm getting the report, so I know something's being done. It does make a difference to me.
All it takes is one call to get started.
Credit Repair has given me a second chance to have a better credit score.
Don't let a low credit score hold you back another day. Do what Terrence did and make the call for your free credit evaluation.
Call 800-819-4152. That's 800-819-4152. Again, 800-819-4152.
Welcome back. We're talking to Rick Seltzer of Inside IRA, and we're talking about divestment for the endowment from fossil fuels. Rick, thanks so much for staying with us this morning.
Hey, thank you. I'm enjoying it.
Yeah, this is a great, fundamental philosophical conversation. I want to talk about the asset managers, the people that are actually doing the investing. A lot of them take in the traditional asset classes, taking a long-term investment, right? A long timetable, a long horizon. That's what we preach all the time when it comes to retirement and savings, and even with managing an endowment or a pension portfolio. How does this, you mentioned, the economic or the financial impact. Are you seeing are you reading about the economic impact of making some of these changes that people are articulating around fossil fuels?
Yeah, it's interesting. Different institutions, different universities have reported various things. One of the first small private universities in the country to divest from oil and gas says it didn't have any substantial impact 10 years later on how their endowment performed. The University of California system reported that they were already seeing benefits just a year or two after divesting. So I think it probably can be done in a way that is either additive to your returns or that is neutral. But the question is, what was in their portfolio before they divested officially, and how did they do it? Because some institutions don't have a particularly high concentration in these companies anyway. It just was never part of their strategy. Some institutions do have a much larger percentage. And then you're going to have to factor in things like, well, what timeline were we counting on this investment for? Or were we counting on it more long term? Because if you're looking on the longer time horizon, there are a lot of fundamentals that are probably lining up to, if not totally eliminate the value of oil and gas. There are certainly parts of the economy where that's going to be hard to do, but there are things that are lining up that are going to probably make alternative energy more attractive from an investment standpoint going forward.
Yeah, and I think that's what fundamentally drives the change. I mean, Rick, we've had this conversation with you and others. What is an ESG or sustainable investment? So when you look at fossil fuel, is an investment, so I would assume like a Shell, an Exxon, maybe a fracking company. But what about the companies that provide the tools to do some of this work? And by the way, those tools may be used in other industries. Maybe they're used for building buildings. Maybe, they're iron, maybe it's a wrench company or something. Again, I don't know the specifics of that. But, I kind of have a hard time understanding where you draw the line. And I guess when you're creating an investment policy and you're following an investment policy as fiduciaries or trustees of a particular pool of assets, how do you draw that line? I mean, this is a big conundrum.
It's a question that college after university after college has struggled with, and they all come down in a different place. It's actually really interesting to read some of the plans or principles they put out. Some places have said, we won't do coal because coal has aspects of it that put various things into the air that we don't want to be putting into the air. Some places have said we will not invest in oil companies that have actively undermined climate science because we believe in science and we do not want a PR campaign against what is, we believe, settled science. And that means, however, that Company A that launched a PR campaign to raise doubt about scientists' conclusions will not get that university's endowment investment, but Company B that may be drilling almost as much, but is also not mounting that PR campaign, might get endowment dollars. So there are a bunch of different options across the board that places have lined up to do. It is, I think, one of those cases where you see institutional values and priorities actually translated into behavior.
Yeah. Now, Rick, let's talk about what the outlook is for countries. But I guess it could technically be countries, Texas and Alaska, right? I mean, they're big enough to be some of the largest economies in the world. But in all seriousness, what's the outlook look like for kind of moving the needle? We talked about at the federal level, some of the political headwinds have been removed, I would think, from both a regulatory and legislative perspective. You mentioned some of the state issues that, or regulations that don't allow for some level of diversification, maybe in some of these states. But what's the overall outlook in the next few years and maybe the next 10 years?
Yeah, well, 10 years is hard. I think the next few years, 10 years is really hard, right?
Because we don't know, Rick.
We don't know where the technology is going to be. And I think that's the real problem with the longer term outlook is it's hard to know how fast the technology will change. And I tend to think that the big driver is going to be cost of the energy itself, right? If we get to a point where solar and wind are as reliable and we have the storage capacity where they can be as reliable as fossil fuels and they are cheaper, then the market will reflect that and colleges and universities will invest accordingly. However, for a place like Texas, that fund owns large swaths of land in West Texas there are other things you can do with that land. You can graze cattle on it, you can put up windmills, you can do various other things. But the question is, what else can you use that land for that is going to give you, the university, a better value? And I think that is kind of the fundamental question, is when does the technology change so that cost benefit analysis or that value proposition of the investment changes too?
Yeah, I definitely think it comes down to viability. I also think it comes down to the resistance to change. And that's an inherent, an innate human quality. Well, Rick, we're going to have to leave it there. I don't know if we're going to move the needle at all today on fossil fuels, but at least we helped explain what's going on. Rick Seltzer, it is always a pleasure chatting with you. I want to wish you a very great rest of the weekend, and we look forward to chatting with you very soon.
Hey, thanks. Be well.
And that wraps up this episode of BRN AM. Have a topic of interest, someone you think we should talk to, then drop us a line. And don't forget, for all the information in retirement markets, technology, personal finance, so much more, all in one place, check out today's edition of our daily newsletter, The Morning Pulse. We're back again tomorrow for BRN Weekly. We'll have a very special guest and, of course, take a look at some of our best segments for the week. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.
Are you being audited and do you owe the IRS $10,000 or more in back taxes? Is the IRS threatening to take more of your money? Don't fight the IRS alone. The Tax Doctor is here to help you negotiate your tax bill and reduce your stress. The IRS can freeze your assets and seize your bank accounts, but you can stop these IRS actions. The Tax Doctor will work with you using our years of experience to represent your case to help you get the best resolution under the IRS guidelines. Help is here to deal with the IRS to reduce your stress. We've handled thousands of cases, so we know what we're doing. If you owe $10,000 or more in back taxes, do not call the IRS alone. Call a Tax Doctor now for a tax emergency analysis.
Call 800-224-6439.